Good morning this Monday, the 7th of August. I'm Grady Wolf, a market analyst with Bell Direct. Mixed jobs data sparked a sell-off on Wall Street on Friday, with the key indices closing lower for the session and the week. While the number of jobs added in the month of July fell short of expectations at 187,000, unemployment ticked lower to 3.5%, and average hourly wages came in above expectations, rising 0.4% for the month and 4.4% annually. The release of US CPI data this week will be a key event in helping the Fed determine its next rate move following the stronger than expected jobs report. On Friday, the Dow Jones fell 0.43%, the S&P 500 shed 0.53%, and the tech-heavy Nasdaq dropped 0.36%. For the week, the Nasdaq and S&P 500 each fell over 2%, and the Dow Jones lost 1.1%. On the earnings season front, Amazon rallied 5.5% on Friday after releasing solid second quarter results, including a return to double-digit revenue growth and boosted second half guidance. Booking.com, or Booking Holdings, the parent company of Booking.com and Agoda and other travel companies, rose 7.9% on Friday on the release of strong results amid the ongoing surge in travel demand. Apple weighed on Wall Street on Friday, though, after the tech giant slid more than 4% following the release of earnings results that included iPhone sales stalling more than expected in the last quarter. Over in Europe, markets closed slightly higher on Friday as investors continued digesting corporate earnings results alongside the Bank of England's rate hike decision. The Stock 600 rose 0.3% on Friday. Germany's DAX added 0.37%, the French CAC rose 0.75%, and in the UK, the FTSE 100 gained 0.47%. Rolls-Royce shares rose 6% on Friday after the company reported a strong recovery in profit. The local market fell in morning trade on Friday on the back of the global sell-off on Thursday, before rebounding to close Friday's session up 0.19%. Healthcare stocks took the biggest hit on Friday as CSL and ResMed weighed on the sector. Gold miners also lost ground on Friday as the price of the precious commodity traded down over 1% last week. The 2023 favourite sector, technology, boosted the market into positive territory on Friday at the session's end, with the sector adding 0.92% at the closing bell. Trading volumes were also especially light last week, so the market was likely down due to investors taking a pause ahead of the ramp-up in reporting season locally this week. On the commodities front this morning, oil is trading almost 0.5% higher at $83.20 a barrel. Gold is up 0.15% at $1,945 an ounce. Iron ore is down 1.84% at $106.5 a tonne, and coffee is trading down 2.06% at $161 a pound amid concerns of oversupply. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open the first trading session of the new week down 0.15%. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the rating on City Chic Collective from a hold to a buy and significantly increased the price target on the plus-size fashion company from 42 cents per share to 70 cents per share, following the company's divestment of its Evans business and EMEA inventory, which helps reduce the company's high inventory build that has been dampening performance in recent times. Bell Potter sees the divestment as providing a clear pathway to profitability for City Chic. And Trading Central has identified a bullish signal on South 32, following the formation of a pattern over a period of 69 days, which is roughly the same amount of time the share price may rise, from the close of $3.94 to the range of $4.31 to $4.39, according to standard principles of technical analysis. And that's all for today. Have a wonderful Monday, and as always, happy investing.